So, hello, and a massive hello to everybody. How are we doing? Hope everybody's having an awesome weekend. This is 50 pips rocking and rolling here, 31st 05 2015. No trade calls, no recommendations. We're here for educational purposes only. The fact they're in here means you've read, you understand, you accept all the disclosures, disclaimers here, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. As usual, the session's recorded, so I'll post it on YouTube later on. It will load, so if anybody misses anything, we'll have to they can get through the recording. It will be on the blog, so a welcome to all of those that may be listening to the recording too. So what's going on? What's going on? How's everybody doing? A bunch of familiar faces in here. And let's get rocking and rolling. Let's do this. Okay, so what's happening going into the week? So this should be a fairly interesting week. Again, as usual, by the way, this is pretty much a first come, first serve. We prefer to focus on the majors rather than on very exotic pairs. But so if you have any pair you desperately want to review, you want me to review, if it's on the platform, I'll have a look at it. Just type in the Q&A. I'm the only one who can see the Q&A. Don't worry, just say what pair you want to review and I'll try and get through as many as I can. You only have to ask once. You don't have to ask more than once because I can see the Q&A log, so I just try and get through most of them, okay? So keep in mind that going into the week, because this is a basic weekly outlook, this is likely going to be a very busy week. So a lot of stuff on the data calendar, so clearly it can be very, very interesting. In terms of Monday, we've got all the PMIs out, starting with the China PMIs, but then, it's pretty much PMI day, right? That's going to be the big focus on the day. Tuesday, very big day because we're going to just before, very early London flows. We've got that RBA rate decision, so a lot of pressure on Kiwi and Aussie recently. So it's going to be very interesting to see how what happens on the RBA statement. We'll talk about that. We got a construction PMI out of the UK, and then we also have GDT price index, so that's going to be interesting. So we have a very strong data point for Aussie at the start of the day, and towards the back end of the day we've got an interesting data point for Kiwi, right? Wednesday, another big day in the overnight session. We've got GDP out of Australia. Then we have all those services PMIs. We've got ADP out of the US. We've got, an ECB press conference, so that's going to be definitely very, very interesting with the trade balance out of the US. So again, it's ECB day. It's another big day. A lot of US data starting to hit the wire. On Thursday in the overnight session, we got retail sales and trade balance out of Australia. So this is going to be a killer week for AUD. We got a rate decision out of UK on Thursday, with that rate statement. We got unemployment claims out of the US. We got IV PMI. And then on Friday, just the little cherry on top of the cake, apart from all the data out of Canada, we've got non-farm payrolls, right? So very, very busy week. A lot of stuff on the wires across the board. And on top of it, don't forget all the, usual geopolitical risk and the Greek circus, which is still going. So we'll likely get a lot of headline risk. There was that talk about that whether they were going to miss or not the big payment on Friday, on the June the 5th. It looks like they might do it. We'll have to see, but clearly there's a lot of event risk there, okay? So usual structure as always. Luckily we have Debbie in the room, so she's going to keep time in case I start to ramble or we lose focus. But basically, let's get through the charts. We can start with the futures, unless anybody has something they desperately want to look at. But I think here, the focus is really on the ES. The last days we've had decent volume, apart from but before Friday, volumes were pretty dead, right? So what's going on? We're getting this kind of hovering at highs. And we've talked about the fact that it's really all, U.S. data, all about U.S. data. So in terms of actual what we've been talking about is it looks that we're stuck here, but we really, are having trouble making any progress and attracting new buyers at highs, which we don't think is very surprising, and we think it's time to see, it would be healthy to see some kind of retracement. But clearly here that 21.19 seems to be the money line for now, right? So a lot of interesting scalping opportunities off that level. Again, interesting shorts started to position here on this negative daily close, traded that to the downside, has been trying to manage and scalp the downside since that close. So fairly interesting. So again, really it should be hopefully make or break, or at least to get some moves this week with all that data coming out, right? Be careful, Debbie. So this week, but clearly as long as we hold below 21.19s, you know, there's the risk that we keep on getting a healthy correction here, you know, whether that is for a move right back down into this ascending trend line, whether that's a move to the 2056s, whether it's a move back here low, we'll have to see. But you know, it would be healthy to see some kind of a correction. It's tricky when the market coils around at highs, because essentially what it's doing is it's resting. So if it does get upside Momo, you know, it could be quite some time till the next correction. So that's where we're hovering here. And I mean, if you look at it on something like with some moving averages, I know a lot of people like it when I put the moving averages on. You see here, we could easily start to correct. We could even come, you know, all the way back down into, you know, 2030, something like that, and you know, back into this 200, and we're still holding, you know, all this series of higher lows, right? So it's a tricky one, but basically this is really not, even though you have to entertain the possibility that this could continue to grind higher, you know, I definitely would not be putting a lot of new fresh money long here. I'd wait for some kind of a healthy correction. I think what the volumes overall in the futures are pointing to is that, you know, it's just a lot of money is on the sidelines, right? So we'll have to see what happens there. In terms of gold, and a shout out to Miss Gold, again, there's just not an awful lot happening. You know, we've been talking about the fact that as far as we're concerned, we're trying to bottom and we're trying to hold this rotation off these 1150s, and we're trying to get a move towards a move back into 1250s and possibly higher. But you know, it's just going to be sidelined here. Not a lot is going on unless we get some follow through in terms of US data, clear picture, and we start to see some moves, right? So here you can actually try and make the case for both things. You know, if you're looking at it, do we have a let's see, let me see if I can get, let me get a new gold chart up. If we look at a gold chart, and again with some famous moving averages here on the chart, right? Let's get the 50. You know, the gray is the 100, the black. And, you know, what it looks like is, you know, a lot of people are going to be arguing that it's trying to hold the negative trend here, right? Smack down here, it's still holding the negative trend. But I think you can't, you know, underestimate the fact that it looks like it's basing, right? It looks like it's basing. It's making a series of higher lows, and if you're talking about some kind of a healthy correction in the market, you know, we'll have to see how that bodes. But I think here, you know, maybe we'll see a lot of chop, but bottom line, the outlook is for this to stay sideline inside this area until we get some decent really move, right? And for me, what that translates into is that there's very little edge trying to trade tight around the 1200 mark, because likely is just very whippy, and there are not a lot of flows coming in there. So I would prefer to stay sidelined, right? And the outlook is pretty much the same, right? Where we're stuck on this silver, where we're talking about this range, which is 14, 16, and 18, and is just hovering here. Again, all the guys who've been listening to these for a while, you know, you're probably bored with me saying, you know, as far as we're concerned, this is the major attempt to put in a swing low here, and we're looking for this to be basing and coiling action around these 1600s, and we're looking for this to try and make a run for that 16 and then break and continue the rotation higher, and then try and make a run back towards the 2050s. Okay, that's our outlook on silver too. Now, in terms of crude, a lot of people asking, Robert also asking about crude. Not an awful lot has changed in terms of the outlook on crude for us. Our outlook was that it was going to try and base around the 45-55 range. We would expect it to take months to base there, and then to attempt the breakout to move towards this whole 75-65, right? So I expect these are the big areas where we'll be doing business. These are the big areas, and again, I wouldn't be surprised if we stay and see a lot of choppy action here. But globally speaking, you know, those are the zones that I'm focused on, right? And I think that's the broader resistance to the upside. We have the broader support to the downside, and you know, I don't think there's much going on. You know, personally, I'm still holding swing longs here. I think all those basing action around the 50 mark was a very interesting opportunity with extremely high risk reward to try and play some, you know, null lever plays, cash one-to-one plays for, you know, quarterly or yearly swing longs for a slope move back into the 65-75 range. I think that was the most interesting trade. That was one of the, you know, probably my top trade in January, and that's still in place. So we'll have to see how that plays out. Okay. Yeah, sure, David. We'll take a look at Aussie. Why? Tell you what, David. We'll look at Aussie right now since you asked so nicely. Now, what's going on Aussie? So basically, those of you who follow the blog, you know, we posted a couple of charts there recently, and basically the bigger time frame we have is this daily, right? And we talked about the fact that it looked like price was basically trying to find a base here, right? And just an important line that we should have up is the 0.75. It's almost like that big line we have on Kiwi we talked about, right? So this is an interesting level. Keep in mind that the 75 mark has, if you want to see where the 75 mark is being pierced or where we traded there, right? You follow the line. You have to go all the way back to, you know, 209. So it's been quite some time. So we would expect a round number that hasn't been tested in so many years to provide pretty decent support or resistance depending on how the price was coming into it. And so far it's doing its job, right? Because it's been trying to rip back down into there since you know, since November of last year, and it's still holding, right? So what is this pattern telling us? So we traded this to the long side on all this basing pattern here for a move back into the top of the range. Then, as I discussed in one of the other webinars, you know, I was looking to get back short here for a break lower, and I was looking for this daily to close back below, and it didn't close back below that 80 mark, so stood off and didn't do anything here. Then it came back up, closed negative here. Again, I would have loved to see this close negative below this area, and then it completely sold off, so without us on the trade. Not a big deal, right? You have to stick to your rules. You know, here we're looking for a close below, it didn't. You know, it doesn't matter. Here we're looking for a close below, it didn't. Doesn't matter, right? You know, be on the next move. So right now, you know, we'll have to see what happens, and I think it's going to be very interesting. Now, as usual, I'm going to be my boring old self and say, as we've always said, be careful when everybody seems to be on a short trade, right? So basically, everybody's saying RBA is going to cut, this is going to die, RBA is going to cut, this is going to die. Now, could be, right? But the whole point is, you know, most likely if you go into, if everybody's, you know, looking for this RBA to cut, or, you know, all the streams seem to be filtered with people saying they're going to cut and Aussie's going to die, I think we can agree that the surprise could be a bounce, not a drop. It shouldn't surprise anybody if this continues to fall knife through butter. So keep in mind that there is still going to be a risk of a squeeze. Now, as students of the market, students of price action, students of events will know that if you look back, even this year, on all the rate decision, every time it's happened with Kiwi, it's happened to Aussie pretty much. Every time we've sold off super hard into one of these rate decisions, what's happened? We've bounced the other way, right? Even though we've tried to take out the lows, no follow throughs, and we've bounced hard the other way. So again, as usual, we like to sell into resistance and buy into support, not the other way around, okay? So having said that, what to look for is keep on looking for, number one, keep on looking for defense of these lows. Number two, I would not be trying to short aggressively ahead of the RBA meeting, and focus on what happens at the 75 through the rate decision. What that means is failure to break it, most likely we get a bounce. We break it and we can't get any traction below and we start closing back above, most likely we get a bounce. We break it and there's no bids in sight, you do not want to get stubbornly long. Okay, right? So that's pretty much what I would be looking at. But I think clearly for me, this is the most interesting chart going into this week, and the early part of the week here is the most interesting level, the chart where the pair where I aim to be the most active, or at least where I think there could be very interesting opportunity. Okay, does that make sense? Now, again, we'll have to see what happens. We have a couple of other charts. We're talking about this on Friday. This is the in-depth chart we looked at, and you see what happened very nicely into the beginning of the day. Price could not get any traction at lows. Those lows from Thursday kept on holding. And what we said is, bounce here, we'd expect it to move back into the previous support zone that should act as resistance, and pretty much played quite nicely. Came back down, support, little bounce, back down, back into support that acted as resistance, and it's stuck inside this zone. And most likely what you would expect into the rate decision or ahead of the rate decision is all the guys are trying to trade with a tight stop above here, probably taken out. All the guys trying to trade with a tight stop below here, most likely taken out, and then the price will decide what to do. Now, a lot of people asking me what am I looking for in terms of on the bounce, what level am I looking for on the bounce? Well, let's see, we have another chart here, and we showed this in one of the other updates, right? Whether you're looking at it on a daily, on a bounce, you can look at that 200, right? You can look at the weekly in terms of the bigger levels. But as far as I'm concerned, if we're just sticking with our most recent chart, it's that 80 mark that is really the key bull bear line from a bigger structural level, most likely from a cyclical level point of view. Okay, does that answer your question, David? Is that good? Any other comments, any questions on Aussie? Okay, cool. Good stuff, good stuff, good stuff. Yeah, it's an interesting chart. It's an interesting interesting dynamics there. Yeah, sure. Yeah, that translates quite easily to, that big number. If you look at the big number, well, that same number is that key level is that 71 on Kiwi, right? So again, we talked about these 7360s being pivotal for action. And you see how once we came back through, we came knife through butter all the way back into those lows. And now it's hovering. Where is it hovering? It's hovering around that 71, which is a key area, and this is a massive support zone for Kiwi, right? So that means that if you're looking at, looking what happened, look at it even on fairly classical kind of action. So when it's hovering like this all day on the Friday, and it doesn't get any sharp move out above the round number, it's very rare that it doesn't end up piercing it. It's just too tempting to try and clip some stops there, right? And what's happened is you see it hovered there pretty much all day, and towards the end of the day, bam, we clip some stops. This is interesting. No follow through. Just some weak longs taken out. Then what happens? Some other guy, we start hovering here. A lot of people looking for the bounce. You're not getting the bounce. So it looks like very low volume chop here. We break back below, but we get no traction again. So it means not a lot of stops. Maybe the stops are wider. And now here's we'll open. It's all going to be about how we behave around the 71. So this is a classic case. You do not sell. It's not a high odds trade to sell this kind of action. If anything, you sell a bounce if you have to. So right here, it's hovering. That 71 mark is going to be the key for the week, right? If you go back on the weekly, you can see that 71. We haven't traded at those 71s, except where it got defended very strongly back here in 2010. It was back in, even earlier on, mid-2010 since we traded there. So it's a massive level. So that's the only level you need to know going into the week. We continue trading below 71 on Kiwi. This is likely going to hold heavy, right? We hold above, well, you could probably get a little bounce. Okay? Any comments, any questions on Kiwi? We good? Yeah, there are a lot of a lot of interesting charts, a lot of interesting things trying to play out here across the board. So yeah, exactly. What's going on cable? Cable, we trade cable very aggressively, and there's just sometimes where you just got to let it do its thing, right? So once we came back down into this support zone, we said, this is once we topped here, we said, okay, we got a couple of areas where we're going to be interested to do business. This whole breakup zone, and then back down around this 100 back into this low, right? So you see, you got a chance here to trade this. You got a nice little bounce. But once it come back, what we said is, again, there could be so many things going on, but especially also into month-end flows. This is not something, just let it come to you, patiently wait. There's no edge in trying to catch this, right? And it's tempting. I know it's tempting. And you can see, even if you're looking at the price action, it looks like it's struggling because it's putting in lows and then it can't close at lows. You've got buyers coming in, right? It's got all this pattern, but this is still, you don't want to be stubborn trying to fight month-end flows. You've got to let it go. Most likely you'll get a better chance to get long, right? And what's happening is it's just slowly coming back down, and there's strong support, but the strong support is further down, right? Is further down. And especially into month-end flows, experienced traders know sometimes it's just not worth trying to mess with cable. So if you look at it on another interesting chart, and remember, this was that chart when we talked about that huge FOMC range that we put in, right? And this is really interesting. So I'm looking at it as a big structural zone. The price stayed in this zone for a long time trying to decide what to do, and we had that false break to the downside, and then we ripped back up. So the big key here, and in a fairly nice fashion, right? We rip back up, we come back into the previous range high, so previous resistance, which acts as support, and we keep on ripping higher, right? Now, the big question is, in choppy, we got event risk, we've got a lot of data, we got this Brexit, blah, 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 blah. What's going on? Now, it's extremely important for the bulls to hold these lows, to hold this zone, right? As long as price can keep on holding above this zone, so these 5160s, and especially end the week back above it, then it's constructive. We could still see more upside. If we start to close back below, this could get even heavier, right? Now, we might get, we will get a bounce. The question is not if we will get a bounce, right? The question is just when, right? So that's the big question. Now, the point is, I suspect, and this is not technical, so please take it with a pinch of salt and ignore it for what it's worth. But as we've been talking about, in terms of structural plays, in terms of currencies, in terms of strong currencies, after the US dollar, clearly cable is the strongest currency out there, right? Also, the data is good. Most likely, they're going to be the first to raise rates, at least after the U.S. Who knows, right? But at least most probably before Europe. So we would expect GPB to continue to have, even though there's these Brexit talks, to continue to have some kind of an underlying bid tone. Now, having said that, most of the people, most of the bigger players, most of the bigger guys swinging bigger money are most likely going to express the view not against the USD. They don't want to express the view against another strong currency. They'll rather express that view towards a currency which is perceived as being weaker, right? So if you're talking the major currencies, most likely the preferred plays just to get short Euro GPB. Now, I think that we've been bearish Euro GPB for years, being awesome pair. But I think here we might get some kind of choppy action. I think the trade is, just very crowded trade, but, that seems to be the way to express it. So don't be confused if GPB doesn't really follow that much, but here it's all about this zone, right? It's really all about this zone. But keep in mind, there's an awful lot of event risk. There's an awful lot of data this week, so things could get very, very choppy. Not the kind of market you wanna be stubborn in, okay? Any comments, any questions on cable? Okay. What's happening on euro? Yeah, sure. Well, euro's hovering around the 110s, right? We talked about how important the 110s were. Now, just to summarize and remember, this shaded area was just when we said that we wouldn't be surprised unless we get something major out of Greece. Unless we get something major out of the US, we wouldn't be surprised for euro to broadly continue to stay choppy inside this range for the whole year, right? Now, what that means is the way this is trading, you could suggest that all Greece is priced in, etc., etc. I don't necessarily want to go into a big discussion. We did that in the webinar the other day. We talked about in detail about Greece, but I think that's not really the scope of this webinar here. I'd like to keep it more technical. So right here, you know, as long as we hold, I'd be looking at that 110 as the bull bear line going into the week, right? This is the chart we have on the blog, and these are the main levels, so you can look at it. But I think you can just as easily just get on a blank chart and just do this, right? Remember we talked about those ranges, those bounces off those highs, right? We bounce right back up, okay? And broadly speaking, what's happening? After an aggressive move down, this was the strong resistance where price kept on selling down, and we started this whole upside rotation where market is making higher lows. And right now we're exactly back where we were, right? So, and because it's choppy, I don't think it's necessarily a level. You can call it 110 if you want, but it's broadly speaking this whole zone, right? So as long as price holds below here, we could still continue to trade very aggressively to the downside. But I would suspect that we have probably, unless something catastrophic happens, that we hold that low for the year and we get some kind of a bounce. And, you know, if something really good happens, we might get a little bounce here, but most likely you'll still see a lot of people trying to sell any rally. So broadly speaking, you know, you could call it contained inside, you know, inside this zone. So I'd be very cautious about trying to play aggressive breakouts to the upside, you know, above 14s, above 15s. I would be very cautious about trying to sell 05s, 03s, 04s, because I think mostly we're going to be in some kind of a broader range, and still, unless something really drastic happens. It doesn't mean there aren't interesting trading opportunities, but it's still fairly choppy inside the range, okay? Better, Karen? Right, so, but again, it's a tricky market. Liquidity is very low. You're getting a lot of choppy moves. So, you know, I don't think, as I said before, even on the ES, it's not the kind of market that really favors trying to play it very, very tight. It's more about the bigger picture, right? A lot of low liquidity chop, market trying to take out stops here and there, right? And, you know, volumes coming in here and there on some of the breaks, but it makes it very choppy to trade. It makes it very choppy to trade. Okay, yeah, sure. What's going on yen? So yen, we talked about yen for a long time. So we've been structurally bullish yen for ages, right? And here what we said is, as long as we stayed inside of this broader area, right, what we kept on saying was that the edge was to try and fade the extremes, right? You just got to let it consolidate. You got to let it do what it needs to do. And what that means that for us, we were just focused on, number one, structurally bullish, but more than happy to try and play the range. So what that means is we're on a daily chart. Failure, negative close at highs on the daily chart, right? More than happy to play short, to try and scalp the short side for low end of the range. Failure to break low end of the range, more than happy to try and scalp it to the upside. Failure to get traction here, more than happy to try and scalp it to the upside. Negative close at highs, failure to break the range, more than happy to play it short for a move back into the mid or lows, right? Back here, no failure at highs. You do not want to stand in front of this. You do not want to stand in front of this. There's a reason why certain kind of closes are higher odds and some aren't. You just got to let it go here. There's no edge. There's no edge trying to fade this. Sooner or later, you might get a move lower. You might easily get a move all the way back here for then it ramping higher. But if you desperately and aggressively try to fade it here, most likely you're going to blow your account before you get the shorting opportunity. Now, again, I wouldn't be, hey man, how's it going? I wouldn't be surprised to see the BOJ on the wires kind of trying to say, okay, this is good enough. We don't really want it to rip crazy. So I'd be cautious. I would be very, very cautious about trying to get long at highs. If anything, wait for some kind of retracement. But I still wouldn't try to fight the flows. As we've discussed in the past, there's a lot of structural flows here. And we'd also looked at this from the monthly. Remember what we said here. Once it goes, cautious, because those 132s in terms of are going to start to come and play, right? It's a big level, right? It's not a trade that's going to play out in a week, but still, there are levels where you've got a lot more edge, and there's areas where you don't want to fight the flows, especially when they're not these kind of structural flows. Thanks, Debbie, okay? Cool. Any other chart we haven't looked at? Any chart anybody wants to look at? USD CAD, what's going on USD CAD? So again, USD CAD is an interesting pattern. So guys that follow here know that we were very bearish and we were looking for this to roll on all these failures at highs, okay? So I had a very nice move down. Now I actually flattened out all my shorts here. Just, you know, it's a decent move. Right here, I don't really have a position, but I'm watching very, very carefully, right? We expected this on this rip higher, right? Because we said, okay, right here, it's trying to put in some kind of a base. If it's going to sell off from here, it won't get back above the bull bear line, which is the 2190s. Back above that bull bear line, not an awful lot of edge. There's two places where we'll be looking to catch this to the upside, right, to get back short. 2487s, 2636s. So right here, we're starting to get the kind of action we're looking for is weakness coming in here. So as long as these highs hold, I wouldn't be surprised, right? See this come right back into those 2190s. You know, back above those highs, I wouldn't really be trying to catch this unless we start to see failures coming in at 2630s. It's been a tricky pair to trade. You've got all the wheeling and dealing on crude that's going on. Keep in mind, we've got huge amounts. We've got huge amounts of US data and also CAD data coming out this week, so that's definitely going to be interesting, right? So we'll have to see what happens, but it looks like it may be topping out a little bit here, right? My thoughts on CHF. My thought on CHF have been the same for, you know, since last year. I don't think there's an awful lot of edge, right? We kept on saying, we kept on warning everybody. You can go back in the archives that it's a sucker's play to try and get long Euro CHF. It's a sucker's play to try and play the central bank on those floors. You all get in trouble. You have no idea where you're going to get filled, etc., 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 right? So it's the same thing. For the past years, I don't think there's an awful lot of edge trying to trade Euro CHF. sorry, CHF pairs, and I don't think there's an awful lot of edge trying to trade JPY pairs unless you're trying to get short yen. You know, basically the BOJ's made it very clear. You've got all the flows, pension fund flows, etc., 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 that are against the yen. So if you're going to trade yen, more likely to short yen. And Euro CHF, I just think it's a bit too whippy, especially I think it's asking for trouble if you're trying to hold over the weekend because there's all kinds of shenanigans always on the open. So I purposely don't really review the charts here because I want to make it very clear. I think retail traders, people that are starting out, there's a lot more edge on a lot more liquid pairs. There's a lot more edge on pairs which don't have wheeling and dealing from central banks. So I don't want to have any kind of part in anybody getting in trouble. So I think there's no edge, right? So of course, Simon, are there trades? Sure. Is there a possibility to trade it? Yes. But I think unless you're, even experienced traders got into trouble trading them. So, I think it's better not to worry on those. And that goes back to, all the discussions also on all the funky exotics, all pairs where you've got huge spreads. There's just no edge, right? We've been talking about that for years, right? Probably for 5-6 years here. And all of a sudden in the past year, as liquidity's dried up and even the brokers have stopped offering all those crazy charts, hopefully people realize why 50's been so boring for the past 5 years or so, saying, don't look at those silly charts because there's just no edge. You're getting ripped off, and the moment the broker doesn't have a huge advantage over you, they're not even going to offer those. So stay on the big level, on the big pairs, stay on where you've got liquidity, stay on where you've got tight spreads. That's where your edge is, okay? Does that make sense, Simon? I'm not being funny. I just want to be responsible. Okay. Any other chart anybody wants to look at? Anything what anybody wants to focus on? GPBNZD, I mean, we don't really look at these. I can look at it. Again, I think, do you have a specific question on GPBNZD? I know a lot of guys in the forums like to trade that. They like to trade GPB, JPY because they move quick and you can make a lot of pips. But remember, if something moves quick and you can make a lot of pips, it can move quick and you can lose a lot of pips, right? Exactly. It goes both ways. So what's going on here? Again, I think if you're looking to... so I don't know what your question is here, but if you're bullish GPB, I think you can express that view in a more efficient, more cost-effective manner through another pair, right? If you're bearish too, and if you're bullish or bearish NZD, I think you've got a chance to express that view through another pair. This is not the pair I would choose to express your view. So just looking at the chart, if you're looking at it, it clearly looks like it's trying to break to the upside, right? You've got a major low that broke and price couldn't hold. Didn't we have this chart? I thought I reviewed it actually in the room the other day. Let me just see if I have it somewhere. Does anybody from the room remember that? I probably trashed it because we don't look at these, but I'm pretty sure we did this. Hey, see you, Peter. So you see here what happened. We broke back down and we couldn't get any traction here. So what does this point to? This points that we've got probably some upside correction coming in, right? If you put those moving averages here on the weekly, you see what's happening. They're using them as a base. They've crossed, and it looks like there's some kind of a rotation higher coming. Right? That 200 on the monthly might be calling, okay? The only thing I would say, it's the same thing as Kiwi, right? You don't necessarily want to get too aggressive on these when they're going into big news releases, and we don't like buying highs. So if you're looking to get short, I think here you might get some interesting shorting opportunities. Most likely it will be some kind of a counter trend short, right? And if you're trying to get long, I'd wait for some kind of move on the data or on the RBA or something like that to try and get long some kind of retracement. I don't know if that answers your question, but Since you haven't mentioned what you're looking at really, or more specific, that's the best I can do. Okay. Hello. So, any other chart anybody wants to look at? So far, we've done even the funky pairs. Haven't refused any chart. If it's on the platform, I'll do it. Any comments, any questions, you can shoot any kind of questions. Nothing's off the table. You can ask me about my fade, my draw. Yeah, again, I think the liquidity conditions, you know, it's not only something on based on Forex. I think it's something that, you know, it's across the board. You can look at the volumes on the futures. You can look at the volumes on the ES these past days. Very, very low, very, very low volume. I don't particularly want to get into a long discussion on, you know, whether it's talk about HFT flows, you know, or legislation or the SMB event, but clearly flows volumes are very low across the board, and you know, and that's a concern. But you know, they'll come back. They'll come back. But you just have to understand the context as usual, right? Why don't we have a GM all in the morning and on the fleet? Because I don't know. To be frank, Debbie really is just kind of like, it's just not the way Twitter's not the way it used to be, right? It's just a lot less interesting. A lot of people, you know, a lot of people used to say hello. A lot of people used to comment on charts. A lot of people used to retweet and do stuff. Right now, nobody says hello. Nobody says anything. Everybody just kind of does the unfollows, then follows with a bogus account. Then everybody shows up to all the things, but nobody bothers to retweet or comment or anything. So it's just kind of not that interesting. And the songs is similar. Is just that, again, maybe I'm getting old, but I'm just tired of people complaining about the songs, right? Exactly. You know, you post a song and then you get people commenting on the blog or something saying that sucks, that shit, why did you post that? And so again, not worth it. You know, it's always the same thing. Unfortunately, it tends to be a couple of you know, Apple spoiling the whole bunch, but it just over time it just gets, you know, it gets a bit silly when you post a song and then you have to, because I answer every email, right? I always answer everything just as a matter of principle. But if I have to deal with, like, you know, 10 insults on just because of a song, then you just can't be bothered, right? Do you only have one chart to analyze and trade the pair? I'm not sure. Let me try and expand on the question. That can be an interesting question. So as far as I can see, the question means is, am I just looking at one chart, and I assume you mean by time frame when I'm trading the pair, right? So what I would do is, I don't drill down on different time frames like some people do. I don't think there's a lot of edge. I think that if you're familiar enough and you're experienced with enough, you can see anything on any time frame, right? You can learn to read what's happening on one time frame by watching any time frame. So what I think is that at the beginning of your journey as a trader, it's important to explore all the time frames, right? To get a feeling for them, to find which time frame suits you better. You know, some people just feel more comfortable reading the action on one time frame versus the other, right? And then just focusing on the time frame which you feel most comfortable with, which is quick enough to not give you too many false signals, right? So that means not too small, and big enough to give you some reliable information, but not huge stops like if you're looking at a monthly, right? And then you'll have to find. Personally, what I do is, and I started doing these things on Sundays, so like doing the webinars or posting the stuff on YouTube, because this is very similar to what I do, right? I'll go through on Sunday, I just get ready for the week. So I'll go through the charts And there, what I'll do is I'll have a look around on the charts, right? So I'll look at various time frames, right? But as far as trading, I'll just usually just trade 1 or 2 time frames, right? I'll just be on the same time frame. I'm never going to switch time frame to micromanage the chart, change time frame to try and get a better entry. The time frame, usually on the week I'll be set on one chart. So, but that's also because I have a lot of experience. But now that I've looked at the Kiwi, for example, on the weekly, on the 4-hour, right? I know the levels, I know what's going on. So usually my main time frames is I'll be on the 15-minute, on the 1-hour. The way I tend to do it is the charts that I trade more actively, so that's Euro and cable, those are just going to be on the 15-minute, and the other charts will probably be on the 1-hour. Okay, that's a good question. Okay. That's good. I like that. We're just going through some questions. Yeah, Chris, I wish we had those GMO apples, right? Lay, in terms of the webinars, where just sign up on the blog. You'll get an email when they are, right? But usually, I used to do them every Sunday, right? I did them, I think, for about, Debbie probably remembers, 4 years straight every Sunday, something like that. And then a lot of people start to say, can't you just post a snippet or something? Because if I miss it, it's too long to go through the recording. So I started doing sometimes the YouTube videos, sometimes the webinar. I think now, I can give you the official executive decision because it's just myself. What I'm going to do now, from now on, is I'm going to do the YouTube video 3 times a month. I'll post a YouTube video, and then once I'll do the 1 hour, this full webinar. And the way I'll try and do it is, I think it's interesting, I'll try and do the full webinar at the end of the month. So we can have a view, we can have a chat, I can answer any questions, and it's at the end of the month, and it makes a bit more sense. Maybe it sets some things straight. We've got a monthly outlook, and then the next 3 weeks, the next 3 Sundays, I'll just do a YouTube video with what the most interesting things, or if something drastic has changed, right? And then at the end of the month, or at the start of the new month, we can do another session like this. I think that's a pretty good, thanks, Debbie. I think that's a pretty good schedule. Yeah. Okay, so just going through some questions. Let's see. Yeah. Okay, that's an interesting one. I mean, yeah, it's how should I answer this one? It's okay, so the question is, because I don't want to sound like I'm trying to plug something. Question is, again, I'll be getting a couple of these. Is somebody saying, I have a really good system, would you consider backing me, right? And, I get a lot of those questions in the past. And in the past, the only thing I really did is, in terms of backing, is consider ways to back students, because I really know what they're doing. But, now if you're interested in something like that, just go on the blog and just go through the Darwin-X stuff. Because essentially what that means is, if you've got a good strategy, you're open for backing. I definitely consider backing, but it's not just me. You're going to have a lot of people, and there's a lot of good things coming on that. I think the people who are early are already on there getting a track record is going to be interesting, because there's a lot of good stuff. I think a lot of people are going to be shocked with what's coming this year, right? Yeah. Yeah, in terms of the Q&A, what I did is, I know a lot of people like the Q&As. What I tried to do is do an open Q&A webinar every quarter. But what I said the other time is, I'm more than happy to just record answers to a bunch of questions at a time if they come in. So if you have questions, just use the contact page on the blog. I'll try and keep them in mind. Sure. Oh, that's good. We're getting some questions. I have no idea what time it is, but we're doing so. Oh yeah. Do I think the markets are rigged? No, I don't think the markets are rigged. Again, how not to be controversial. Well, let's just say it as it is. Again, it is what it is, okay? It is what it is. So if you want to play, that's the market you get. From experience, what I find is that only people who are not profitable complain about the markets being rigged most of the time, right? So, or let me put it somewhere else. So somebody who's trading on Twitter, and let's say the famous algo come in and trip some stops, right? If it happens to be in the direction of that person's trade, they're never going to spend the rest of the day on Twitter saying the market is rigged, because they made money, right? If it's against them, then they'll spend the rest, you see what I mean? So it's always subjective. But the bottom line is, and I've discussed this a lot, is whether you're talking about high frequency, whether you're talking about the banks or whatever, if you're looking at technical analysis, you're looking at the same things everybody else is trading. You've got platforms, you've got very tight spreads, and you can engage. Nobody has a gun to your head, telling you to trade 1 to 500 leverage. So what happens is that nowadays, people really have a shot at making a living out of trading, right? They can do it. They have access to liquidity. They have access to tight spreads. They have access to really good technical platforms, to IT structures, whatever. In the past, this never would have happened, right? People forget that, in the past, minimum lot size was 1 million or something, right? Even if you had to buy 100 shares of stocks, you had to pay $30 commission. Now you can trade across the clock. You've got access to all the markets you want. You've got very tight spreads. You can trade very, very small lot sizes. So everything's stacked up in your favor, right? Now, is it easy? No. Do most people make it harder for themselves? Yeah, they make it harder for themselves by trading when there's no liquidity, by trading with too much leverage, by being undercapitalized, by having unrealistic expectations. Are the markets perfect? Absolutely not. But, I think if people worried less about complaining about the markets and focusing more on their expectations, or having realistic expectations, or trading more responsibly, I think they'll see that it's a different story. Okay. Hey, my pleasure, man. Yeah, we did gold at the beginning of the session, so I'll post the recording. You can just go back. We did gold and silver, okay? Since you talked about the 15-minute chart, do you close your trades at the end of every day? Not necessarily. Now, that's an interesting topic. Keep in mind that with every question, the real answer is it depends, right? Be very careful with what people tell you, because it depends on everybody's situation, right? What do I mean? So taking your questions, for example, do you go flat at the end of any day, right? Every day. Now, some people might go flat at the end of every day because they're not comfortable holding overnight risk. Valid decision not to hold overnight, okay? Some people might close at the end of the day simply because they're trading for a prop firm, or they're trading in an environment where they have to close, right? Legitimate reason. But if you ask them and they say, yes, I close, it's not because it's good to close, it's just because that's the situation they're in, right? Some people that live in certain jurisdictions will always be flat at the end of the day. Then they'll reopen straight away, because that means that there's a different tax treatment if you don't hold positions overnight. So whether I hold or not overnight is not the good question, right? The question should be something like, are you comfortable holding overnight risk? Yes, I'm comfortable holding overnight risk. I have no problem holding overnight risk. I don't like holding too much over weekend risk, but I have no problem with, overnight risk, or, as long as the market's open. Yeah, for me as a general rule, I don't let anything dictate my trade once I'm in the trade, except for price. As long as the price is reacting the way I want it to react, it hasn't broken a level at which I think the trade no longer has a good chance of working out or hits my TPs, I let them do. You know, there's very little considerations there. Okay. See you next time, Chris. Thanks for showing up. Okay. Any other comments? Any questions? Anything anybody wants to look at? Okay, rock and roll. Just going through some of the other questions. Okay, guys, rock and roll. Listen, let's call it a day. We've been going for almost an hour. We'll do one soon. Thanks for everybody for showing up. It was good. I enjoyed the Q&A session at the end. Those are fun. Those are the funnest one. Let's see what the week has shaped up for us. Keep in mind, there's a lot of risk, but you know, should be some interesting opportunities. Okay, guys, have an awesome one. Stay safe. Thanks for coming. Bye-bye, guys.